This video covers required minimum distributions, or RMDs, and the changes brought by the Secure 2.0 Act. The IRS requires you to take distributions from your tax-deferred retirement accounts and pay taxes. Secure 2.0 has adjusted RMD deadlines, reduced penalties, and introduced a new Roth account loophole. The Secure 2.0 Act delivers three major benefits. First, the RMD start age is now 73 and will increase to 75 in 2033, allowing more time for tax-free growth. Second, penalties for missed RMDs are significantly reduced. Third, lifetime RMDs on Roth employer plans are eliminated, starting in 2024. The RMD age deadlines have shifted over time. Previously, RMDs began at age 70 and a half, then increased to 72. Under Secure 2.0, if you turn 73 after January 1, 2023, you get an extra year of tax-free growth. Here is the RMD age timeline. Pre-2020, it was 70 and a half. From 2020 to 2022, it was 72. From 2023 to 2032, it's 73. And from 2033 and beyond, the age increases to 75. Being younger than 73 today means you benefit most from the delay to age 75. You can delay your first RMD until April 1st of the year after you turn 73, instead of the usual December 31st. However, be aware of the, quote, double distribution trap. Delaying means you'll take two RMDs in the same tax year, which could push you into a higher income tax bracket. Consult your CPA to plan this carefully. The old penalty for missing an RMD was a brutal 50% excise tax on the amount you were supposed to withdraw. Missing an RMD or miscalculating it meant the IRS would take half of the required distribution. Secure 2.0 has dramatically reduced this penalty. The RMD penalty has dropped from 50% to 25% under Secure 2.0. Even better, if you self-correct the mistake within a 2-year window, the penalty drops to just 10%. To qualify for the 10% penalty rate, you must withdraw the required missed funds and file a corrected tax return, all within 2 years. This self-correction window helps minimize tax impact. Individual Roth IRAs have long been exempt from lifetime RMDs. However, Roth 401k or Roth 403b accounts through an employer still required RMDs, an unfair double standard. Secure 2.0 fixed this double standard starting in 2024. Now both Roth IRAs and Roth employer plans have no lifetime RMDs. The lifetime RMD requirements for all Roth employer plan accounts were completely eliminated. The new Secure 2.0 rules offer powerful tools to protect your wealth, but only if you use them strategically. Here is an action plan with 3 key moves to make right now for 2026. Action number 1, track your age target. If you are returning 73 this year, you must take your first RMD by December 31st or delay it until April 1st of next year. Plan the timing carefully, as delaying results in 2 RMDs in 1 year. Action number 2, use qualified charitable distributions or QCDs to avoid taxes. A QCD lets you transfer funds directly from your IRA to a charity, counting toward your RMD without adding to your taxable income. The 2026 QCD limit is $111,000. Action number 3, review your spouse's options. A new 2024 rule allows surviving spouses inheriting an employer retirement account to elect to be treated as the deceased employee. This can delay RMDs and use a more favorable life expectancy table, potentially reducing your annual tax burden. Your complete 2026 RMD action plan includes tracking your RMD start date, utilizing QCDs up to $111,000, and reviewing spousal options to delay RMDs and use favorable life expectancy tables. This table summarizes the RMD rules before and after Secure 2.0. Key changes include the RMD start age moving to 73, and then 75 in 2033, the penalty for missed RMDs dropping to 25%, and the elimination of RMDs on Roth 401ks starting in 2024. Remember these key penalty numbers. The old penalty was a steep 50%. The new standard penalty is 25%. If you self-correct within the 2-year window, the penalty is further reduced to just 10%. Secure 2.0 introduced powerful tools, but the rules are more complex than ever. Carefully coordinate decisions like timing your first RMD and navigating spousal inheritance. Always work with a qualified CPA or financial advisor to avoid penalties or being pushed into a higher tax bracket. The bigger picture shows why these changes matter. You get more time for tax-deferred compounding, and their-reduced penalties make honest mistakes far less costly. Eliminating Roth 401k RMDs also provides greater tax-free legacy planning for heirs. Protect your wealth by knowing your new RMD age, utilizing the self-correction window for a 10% penalty, using QCDs up to $111,000 tax-free in 2026, and confirming that Roth 401ks no longer have lifetime RMDs after 2024.